Yeah, so I'm Scott Sanborn. I'm the Chief Operating Officer for Lending Club. Lending Club is the largest marketplace lender in the United States, and we were founded in 2006. First loan was in 2007, and I joined the company in 2010. What worries me, execution. We have a really massive opportunity in front of us. There are so many great ideas, and all of them have a very high likelihood of working. And it's about picking the right ones in the right order and making sure that you've got the organizational structure in place, the technical infrastructure in place to build out that business. Part of the success of Lending Club, we weren't the first in our space, and we've become the largest through kind of the focus and power of that deliberate execution. And continuing to maintain that as we grow is what worries me and keeps me up at night. One of the key differences and strengths of the company is the scale. So we are significantly larger than anybody else, and what comes with that footprint is, we've helped over 1 million customers. Those 1 million customers have brought with them not only relationship potential for the future, but also a tremendous amount of data and a track record. So we've been doing this, like I said, first loan in 2007. We have 7 years of loan history, which means we have an incredible track record at very large scale. That track record lowers the risk premium associated with Lending Club, which means investors are more willing to give us their capital, and we can actually lower the return requirements that we deliver to investors because of that trust. That allows us to get more borrowers. And we get a nice network effect, which we've really been seeing take off in the last few years. Yeah, there's just so many advantages. There's just the rational, practical advantage, which is we're typically able to provide a better rate. Because of the nature of a marketplace where you have investors competing for the assets, that results in the market price, if you will, for the credit. And on average, our customers are telling us they're saving about 29% versus their traditional alternative. So it's a very meaningful savings. But it's definitely more than that. It's also just a fundamentally better experience. So the net promoter score for Lending Club is in the mid to high 70s versus a traditional financial institution where it's in the 20s. You get your offer instantly as opposed to waiting days. It's a compelling offer. You get your money in a few days. You can do it all online without going into a bank. So all of those, and you kind of know what's happening throughout the process. It's very transparent. It's not like, I think, a traditional black box where you fill out some papers and you send it in and you wait a few days. Some of the processes today are, you go online and they tell you to print out an application. You print out the application and they tell you to bring it into the branch. You bring that into the branch, they tell you thank you, we'll be in touch. And then I've even heard, because we're doing competitive shopping, I've even heard in a few days they get, you've been approved, in a few more days we'll tell you what your interest rate will be. It's just a very different experience than having a rate put in front of you within a minute or two. I think I look at Lending Club. If you go to 2009, half of our customers were aged 18 to 35. We've since gone mainstream. It's less than a quarter of our business is now 18 to 35. We're firmly in kind of mainstream population. I think that's where this marketplace lending is coming to a credit vertical near you. We're seeing it in real estate, we're seeing it in business loans, we're seeing it in auto loans, student loans. It's evolving very quickly. And I think what we're seeing more and more of is broader and broader participation in those assets. For Lending Club, we have so many different types of investors that are now participating. Insurance companies, private pension funds, banks, credit funds, specialty finance companies, individual, everyday retail investors, high net worth investors. So I think it's just becoming more mainstream because of the value it brings. I mean, I think the entire power of making the right lending decision comes from the rich data that's available. Us reporting back to the Bureau helps to inform those data decisions downstream. Us pulling from the Bureau informs our decision, us reporting back informs other decisions down the road. I mean, I can't imagine the functioning of a marketplace without that fundamental give and take.